All right. Gives me great pleasure to bring on board Abhishek Lodha, Managing Director and CEO with Macrotech Developers. Let's understand from him which way things are moving, how the industry is shaping up, and are we in for a good Diwali and a Dussehra? Good morning. Are you ready, Abhishek? Can I come to you?
Good morning. Yes, I'm ready.
A smile on the face tells me that all is well. All the fears of a slowdown because of high interest rates that we can dismiss easily.
Yes, we believe that what we've seen in the housing market since September of 2020, so it's been 2+ years now, is indicative of the fact that housing in India is at the start of a long-term upcycle. All the factors which are going to drive a solid boom in housing are in place: great affordability, good wage growth, the consolidation on the supply side, and the desire of the consumers to buy bigger and better homes. We will, of course, from time to time have some macro concerns, but the underlying fundamentals of the housing industry are very, very strong. And we strongly believe that housing volume in the big urban centers will at least triple in the course of this decade and equally grow at a similar pace in the next decade. So next 10 to 15 years, we see very strong growth in housing.
Abhishek, hi, good morning. This is Anisha also joining in the conversation. But what could derail this story? You're sounding fairly confident despite the macro headwinds, despite the fact that interest rates are going up. What could really derail the story? Because the pent-up demand that was there seems to be over. Is there any plateauing of demand?
There's not. We had our best ever first half, 6,000 crores of sales in the first half of the year, which is typically the weaker part of the year, given we have the monsoons, we have the Shraddh or Pitru Paksh period, we have summer vacations. Everything in the first half tends to be weaker, and yet we had 6,000 crores of sales. This compares to 9,000 crores of sales that we did in the full year last year. So we're just at the start of a long-term cycle, because fundamentally Indian housing volumes are too low given our population base and the way our incomes are growing. What could derail the story? Means I don't really see anything significant derailing the story. You could have a short-term impact if you had a big situation of job losses, but till we have good job creation and good wage growth, the housing story is here to stay.
Okay. How much of the commodity pricing challenge, which all cement cost, shortage of labor, that is behind?
Definitely, commodity prices have come down. You are, more aware than I am of what's happening in the commodity space. But having said that, what's important about housing in India is that construction cost is only 40% or a little less than that of the sales price. And even within that 40%, labor cost is another 40%, which typically does not tend to have high inflation because the supply of semi-skilled labor in India is plentiful. So you really have only 20 to 25% of the overall sales price exposed to inflation. And so therefore, even earlier in the year, in March of 22, when commodity inflation was its highest after the China lockdown and the Ukraine-Russia situation, the net impact on cost of goods sold was about 2.5%. And that number is now below 2%. So really, this industry is quite well protected against the headwinds of inflation. And that is one of the reasons why fundamentally housing is on such a strong wicket in India.
About the core market, the Mumbai market, that's where you're expanding. That's where your heart of your business is. The real estate pricing trends in Mumbai are strikingly different from what is happening to other parts of India. Why? And where do you see Mumbai real estate pricing moving? Demand and pricing, as anybody would say, they're two different things.
Absolutely. I think, demand and pricing are two different factors to concentrate on, but of course they are interlinked. The fact is that in Mumbai, which is sort of really our core market where we are by far the market leader, as well as in Pune, where we are expanding quite rapidly, we see that pricing is moving in line with our stated philosophy that price growth should be below wage growth. This will ensure that affordability keeps increasing and therefore volumes keep increasing. In Mumbai this year, on average, we are seeing price growth about 6-7% on an annualized basis, and wage growth in the country this year will be between 9 and 10%. So it really is a beautiful situation where you are seeing price growth, but price growth is below wage growth. Therefore, affordability increases and more people are able to afford buying their dream home, which ultimately leads to the growth in volumes, which is so important for the overall economy because housing is such a big multiplier, creating jobs in the construction side, creating jobs in the supply chain, and of course, with price growth, creating wealth for homeowners.
Morning, Abhishek. Avan as well joining in. And speaking of buying the dream home, we also understand that the demand for luxury homes has surged quite significantly, much more than what we saw post-COVID. What do you think that the reason for this is, and how do you see the trend for luxury sales and demand growing?
Morning. Yes, I think demand is quite strong across price points, and that really is driven by the fact that between 2015 and 2020, where the rest of the world was racing ahead in housing volumes and housing prices, India was not really doing much. We now have a situation where, with moderate price growth, like I said, 6-7% per annum, people are seeing the benefit of buying their homes in a timely manner, and that consequently is leading to growth in demand. On the other side, supply is quite consolidated. People only want to buy from the best brands, the best names, and that's even more acute in the premium and luxury segments, where consumers are even more choosy. And therefore, you're seeing a situation where supply is moderate to low and demand is growing. Consequently, you have a healthy market situation, and that really is what's driving and fueling the continued volumes. People spoke about pent-up demand when we came out of COVID. Now, I think we would all agree that 2 years later, it's not about pent-up demand. This is continued sustainable demand.
Abhishek also wanted to come back to your numbers, and you pointed out how first half of the year has been rather strong. In Q2 there's a growth of 57% year on year, and you've done half of what you had guided for in terms of the pre-sales, which stood at 11,500 in terms of the target for the year. What are the chances you're going to beat your guidance of 11,500? And with respect to launches, what should we expect over the next few months?
Yes, we did. We have had a strong start to the year. The first half has been ahead of our expectations. Having said that, we aren't making any change to guidance, and we'll review that at the end of the current quarter, which is the festive season. As we're all aware, there are clouds looming at the global level, and therefore, rather than changing our guidance, we remain focused on delivering on the performance that we've showcased so far, and hopefully we will perform in line with or ahead of what we've guided so far.
Abhishek, since we are talking about the festive season, for consumers' point of view, should we expect any better discounts, any better offers?
I think consumers are focused on buying the best home they can buy. They recognize the fact that this is not buying a brand of toothpaste. This isn't buying a bar of soap. This is buying a home which is going to change the outlook of their social status as well as their family's lifestyle for many, many years. I don't think consumers today get taken in by discounts and offers. What they want is the best value. The best value is the best product with the assurance of high quality, timely delivery. And doing that comes from the best brands. People, of course, look at pricing, but pricing is only one part of the equation. I think the festive season currently is a great time to buy because, as I was saying, demand is strong and supply is quite limited and consolidated. So anybody who's looking to buy a home, this is a good time to buy. We of course have our very attractive offer of having home loan rates capped at 7% up to 2024. So therefore, it's quite attractive for anybody who really is an end user and wants to buy homes. They shouldn't get affected by the moderate increase in home loan rates that we've seen over the last 6 months. And this is a great time to buy.
You moved out of Bombay, you've gone to Bangalore, you've gone to Pune. These are not your core markets, but we understand that you're looking at increasing your market share to 2 to 3% there. Could this expansion in the short term come at a cost of drop in margins which could impact aggregate picture?
We currently are focused on the Mumbai and Pune market. Mumbai, as I mentioned, we are the market leader. Pune, we see very good response to what we've offered, and it looks likely that sometime in the next 18 to 24 months, we will reach a position to be the market leader or definitely being amongst the top 2 players in that market. In both these markets, we continue to see that margins are performing in line with what we have delivered historically. Our EBITDA margins historically have been in the mid-30s, and I think we continue to see that we will, on a blended basis, deliver the same across Mumbai and Pune. Bangalore, is a market where we've just entered with our first project. We launched that sometime in calendar year 2023. We are going to be steady in our approach to Bangalore. We want to learn how the market operates. We want to see how to continue to be strongly profitable there. And we want to make sure that the consumer's aspiration of higher quality housing, which we have so well fulfilled in Mumbai and Pune, we can also fulfill in Bangalore. But Mumbai and Pune are clearly what are driving our growth over the next 2 years, and we continue to see that margin will, on a blended basis, be in line with historic performance or even have marginal expansion, because price growth of 6-7% is going to lead to some margin expansion.
And Abhishek, the working capital issues that the company was facing at one point of time seem to have been behind the curve now, because the net debt too has reduced even on a year-on-year basis substantially. If I have it right, it stands close to 8,800 crore rupees now. Where should we see this figure trending, let's say, by end of this year?
Our net debt position is at about just under 8,800 crore rupees. Our net debt to equity is at about 0.6 to 0.7 right now, and we are taking it towards 0.5. We are very strongly focused on continuing to deleverage even as we deliver growth. And this combination of growth and deleveraging happening simultaneously is quite rare, but we have delivered that quite well over the last 18 months and continue to believe that we will. On an overall basis, we expect over the next 6 to 9 months that our debt will be, our net debt will be quite close to 6,000 crores, which is kind of the level that we want to be at, where our net debt to equity is less than 0.5x. And our net debt to operating cash flow, annual operating cash flow, is less than equal to 1 year's operating cash flow. So we want to be very, very conservative on leverage. And with the strength of the cash flow that we are producing, we feel pretty confident about getting there quite soon.
Achieve that. I mean, it's the perfect scenario for a shareholder and for anybody when they hear things like, I'm going to grow and I'm going to reduce debt and I'm going to be very, very cash disciplined. But to achieve that, you need a lot of tailwind for a sector like real estate, which has to come from the macro front. Are you confident and certain that you would be able to maintain this kind of an expansion with reducing leverage?
We do feel quite good about our growth, top line growth, bottom line growth, as well as the ROEs that we want to deliver. Like any good Indian company, we have our cricket analogy equivalent, which is to be 2020 on an ongoing basis, deliver 20% top line growth and get our ROEs close to 20% over the next 2 to 3 years. We feel quite good about that. I think on the leverage side, we are very, very clear. We are very conservative when it comes to the level of leverage we want to carry. And on that side, we expect to be very, very disciplined.
Every time I have you on the show, immediately I get either a WhatsApp or messages. Please ask Abhishek Lodha that what is the future of the real estate market per se, and when will genuine investors make a comeback? Up until now, we are getting a sense that it's only the first time buyer who's made a comeback.
I agree that today what we are seeing are end users. I don't know if I could call them first-time buyers. People are upgrading their homes, as was mentioned. Even premium and luxury demand is doing well. They already own homes and they're buying because family needs have grown. And I do believe that that's the best for the market, that the end user, because India has such a low level of urban home ownership, that end users buying is the best thing that we can see, and that's what we as a company are focused on happening. People who come in for investment, i.e. to buy and then exit over the next 3-4 years, that's not really the kind of buyer that we as a company seek. We want to sell to people who are long-term holders, people who want to buy the unit for themselves or their future generations. And that's really where our focus is.
How is this real estate cycle different from the previous cycles? Your balance sheet is definitely different in terms of the numbers what you've shared with us. But what we want to understand for benefit of a large audience is that real estate, it follows a cycle. A 5 to 7 year boom cycle, then a 5 to 7 year lull cycle. Assuming that we are at the beginning of a 5 to 7 year boom cycle, how will this boom cycle be different from the previous boom cycle?
I think what we are going to see in this cycle is an expansion in volume. We are going to see the housing industry becoming a lot more broad-based. Lot more Indians will become homeowners, and that really will ensure that middle-class wealth creation happens at a much bigger scale than has happened in previous cycles. The other important element which is different in this cycle is that the supply side is very consolidated. You and I, we've all seen what's happened when people have sought the lowest price, how people have gotten burnt, how people have lost money, and therefore consumers today are very clear. They only want to buy from the most credible brands, those who have a long track record of delivery, those who have financial discipline, those who have strong management teams. That really will ensure that the supply remains consolidated, the supply remains disciplined, which ensure that even as the volumes grow, you don't get into exuberance. Ultimately, what you need is steady growth in this market, volume growth, modest price growth, and that will ensure that housing plays the due course, the due role that it should in India's economic growth. Housing's contribution to GDP last year was only around 7%. That's just too low. China, of course, does mid-20s, but we can't compare to China. But any other reasonable economy, housing contributes, in the mid-teens when it comes to the overall share to GDP. And that's where really we think housing will go to in the course of this decade, with the disciplined supply side and the growing volumes on the demand side.
So just last question, we've spent almost the entire interaction discussing home loans, real estate, residential demand. What is the big trend you see in the commercial real estate market? A lot has changed there, from work at home to normalization, from growth of warehouses where you are present to that way data centers are mushrooming up. Which end of the commercial real estate as a category cluster you are most bullish on?
I think we all have to know that India is only at the start of its growth cycle. This 3 trillion economy will be somewhere between 50 to 75 trillion in the next 30 years. Everything is going to grow. What you have to be is disciplined. You have to learn how to manage scale. You have to build deep management teams, and you have to be very, very focused on the bottom line, even as the top line grows. We, of course, at a company level are quite bullish on the core space of warehousing and industrial parks, because we believe that India's manufacturing economy, as well as the e-commerce driven supply chain, have a long, long way to grow. So that's part of the market we really like. We're very lucky to have partners like Morgan Stanley, Capital, and Ivanhoe Cambridge partnering with us to create a really huge platform when it comes to warehousing and industrial parks. And given the fact that the construction cycle of warehousing is quite short, 6 to 12 months, the capex intensity is low. And we like that because that helps us deliver the target ROEs of close to 20% that we want as a company. So we really like the warehousing and industrial park space. But having said that, whether it's retail, office, or any other segment, data centers, India is just going to see a lot of growth. The true differentiation is going to be who has the right management team, who has the focus on the bottom line, and who can actually execute.
Okay, Abhishek, on that optimistic note, we'll let you go. Really appreciate you joining us and sparing us with your thoughts with respect to how's the commercial real estate doing, how's the residential market doing, and what is in store for the rest of the industry as well. But shifting focus to the markets for a quick look at